The last week of January closed out with fireworks, or should I say bombshells. Strap in for a recap of the 3 biggest stories that impacted crypto last week. Stick around to the end of the video as we dig into the first FOMC meeting of the year, Tether's gold stockpile while metals pump to new all-time highs, and that massive Bitcoin dump amid looming tensions with Iran, all while the government shut down again. I'm going to give you the breakdown on the massive crash on metals, President Trump's appointment of the next Federal Reserve chair, and even a breaking development on Cardano. Let's dive into it. Welcome to Trade Crypto Today. I'm your host, Ellie, and I'm a crypto enthusiast and content creator by day, power slap, and mixed martial arts competitor by night. Follow me on X for more, and let's dive in. On Wednesday, January 28th, the Federal Open Market Committee held rates unchanged as expected. Back in mid-November, odds on Polymarket showed a 40% chance of a rate cut, later falling towards zero as the date drew closer. That would have been a nice swing if you were betting against a cut. Now, odds of federal interest rate cut at the March 18th meeting are only showing 8%. So much for quantitative easing, right? According to the central bank policy statement, job gains have remained low and the unemployment rate has shown some signs of stabilization while inflation remains somewhat elevated. The Fed's pause on rate cuts signaled to investors that quantitative easing is just simply not on autopilot yet. Following this, on Friday morning, President Trump announced his selection of Kevin Warsh as the next chair of Federal Reserve, saying that he will cut rates without any pressure. However, there is speculation that Warsh's appointment factored into the sell pressure across markets late in the week. Seemingly, this is because Warsh has advocated for a tighter balance sheet, as he's been on the record saying that he doesn't want to buy assets to expand the Fed balance sheet anytime soon. So the question is, are markets pricing in the fear of getting lower rates without boost in liquidity that is actually substantial? Expanding the Fed's balance sheet is a key part of the Fed's arsenal to loosen monetary policies, and investors fear that getting rate cuts without assets added to the balance sheet isn't enough to send markets to the next level. On Tuesday, February 27th, it was reported that Tether now holds over 140 tons of gold worth $23 billion, the largest known non-sovereign gold stash in the world, stored inside a nuclear bunker. Subsequently, gold and silver printed record highs last week, surpassing $5,500 and $120 respectively. Then, on Thursday, El Salvador bought $50 million worth of gold, ironically right before the massive metal crash heading into Friday morning that wiped out over $3.15 trillion from the combined gold and silver market cap. Gold gave up over 13% in losses, while silver crashed over 30%. Lastly, for this week's recap, Bitcoin fell on Thursday to a low of roughly $83,000 on escalating tensions between President Trump and Iran. He took to Truth Social, stating that a massive armada was heading to Iran as he urged them to come to the table quickly for a fair and equitable deal. All while the chances of yet another government shutdown have been loomed all week, with the odds of a shutdown on Polymarket hanging out around 80% and getting as high as 88% as of midday Friday. It was too late to vote in the House to prevent shutdown. On the Friday morning metals sell-off, Bitcoin dipped as low as $81.1 thousand as of midday Friday. Bitcoin seemed to be experiencing some temporary relief, bouncing right along with metals as it breached above $84,000. This came right as Senate committee had just passed the crypto market structure bill midday Friday. The bill, however, still awaits word from the banking committee and full House and Senate votes. So, although this is an important milestone, there is still more to be done before the rulemaking begins and it really rolls out from enforcement agencies. Yeah, that's right. I'm afraid there's no moonshot yet because of the bill. Over the weekend, Bitcoin tumbled further to a low of $74,000. This weekend, warrior price action left a CME gap to the upside of $84,000, and the daily printed a little bullish divergence. Longer time frames and the macro environment suggest, however, that we may just be in for a little relief rally, followed by some more tumble to the downside. Probably don't look at the market structure bill to save the day yet, as these things are moving painstakingly slow. How about the fact that the SEC and the CFTC hosted a joint harmonization event to help launch Project Crypto? Same thing, different day. The market seems to be in a place where it wants to see actual follow-through. Bills passed and implemented, regulatory projects actually launched, Bitcoin actually purchased for the US Strategic Reserve, etc. The market has been refusing to react bullish apart from seeing real final projects. Honorable mentions this week include breaking news of USDC-X on Cardano, a non-EVM privacy version of USDC backed one-of-one powered by Circle. Additionally, Xgov is now a fully open source project on Algorand, marking an important milestone in decentralized governance. Lastly, it was reported that a United Arab Emirates entity had agreed to purchase 49% stake in the Trump family project World Liberty Financial for $500 million right before the inauguration last year. WLFI rose 15% in 24 hours on the news. If you want to see more technical analysis breakdowns for Bitcoin and top altcoin setups, plus weekly wrap-up videos, subscribe to Trade Crypto today. Check out all the links in the description below designed to help you take your crypto trading experience to the next level. If you found value in today's video, drop your thoughts in the comments below, slap that button and knock out that notification bell so you don't miss a thing. That's all I got, guys. My name's Ellie, and have a safe rest of your day. Get rich or get wrecked.